Hello and welcome to Switzer Super TV. I'm Peter Switzer, this is my colleague Paul Rickard. Hi Paul.
Hello Peter.
Now, I got a great question from one of our colleagues at the office today, and they said, well, how come the Australian market hasn't done as well as the US market? They're in all-time high territory, and we're about more than 1,000 points shy of where we were in November 1, 2007. Yep. So what do you reckon is the main reason?
Well, one of the reasons has been the state of our currency, because our currency got so expensive when it went up to almost $1.10. I think that probably exceeded everyone's expectations, and people from offshore, they're not just looking at our stock market, they're also looking at back in US dollar terms. So if our currency gets very, very expensive, they tend to stay away from our market. Yep. It's a little bit cheaper now when around 90 cents, but I still think most people would say our currency looks overvalued.
Exactly.
And so they're worried about the downside risk.
So, and part of the problem there was also our Reserve Bank was very cautious because our economy didn't actually get devastated like the US and England and Europe. And so our interest rates are relatively high, while the Yanks pushed their official cash rates down to about 0. So as a consequence, they had this depreciation of their currency, which gave them a great competitive advantage where we had a competitive disadvantage.
It has, Peter. We've almost been sort of muddling along the last couple of years. I think we've had a reasonably, look, I won't say hostile, but we haven't had the most sympathetic climate to business. And I think that people have seen that. Consumer confidence has been okay, but nothing startling. There hasn't been a lot of investment outside the mining industry.
Yeah. The carbon tax.
The carbon tax, all those sort of things have been negatives. And I think people have said, well, it's a nice market, but it's not we're not raging ahead, have we? And
what's also interesting, I think you're absolutely right. What's interesting is that, relatively speaking, Australian wages are high, say, compared to Americans. But if you add the currency impact as well, Americans not only have cheaper wages per hour, they also had it cheaper for foreigners to buy them because the currency was down, and we were the opposite.
Well, I think that's brought out one of the ComSec, or Craig James's, I think the Big Mac Index he does.
Oh, yes. And
whenever he publishes that, you can see how expensive Australia is. Maybe it's cheap in the last 12 months, but perhaps we're paying the price for being, wages being too high potentially, and just not having enough reasons why people need to invest.
So a lot of the companies on the stock market that are sensitive to the dollar and interest rates as well, it hasn't shown up in their earnings. It doesn't show up in their earnings, the share price can't respond. So these companies are like a wound up spring. Hopefully they'll spring out and our stock market will play catch up eventually.
Look, I think we're due for some catch up. I mean, it hasn't happened to a great extent yet, and certainly the numbers that are coming out about our economy and consumer confidence are getting on the right side, but we're probably not seeing the same enthusiasm as they are in the US at the moment. I've got a sense we'll catch up at some stage.
Okay. Well, also you often made the point about capital dilution. Explain that to the viewers.
Well, the other impact was back in 2008, 2009. We had some enormous capital raisings where pretty well every company in the early part of 2009 had to issue shares because there was no liquidity. They could not borrow. And there was, you just had to make sure that you could say you're going to be in business in a couple of years, so you went to your shareholders and found some equity. And so there's quite a strong school of thought that our reported market high was more like about 6,800 when you actually take account of the dilution that occurred in late 2008, early 2009. It's more like around about 6,000 or 6,100.
Okay, so therefore this year we might get to that created high that was been decreased because of the capital raising. Good answer, Paul. Good to see you. And that's Switzer Super TV for this week.